just want to reflect on something we heard about 5 minutes ago from David Rosenberg, pushing back against this idea that inflation will be stickier on the way down. Bill, I know you listened to some of that conversation. What did you make of it?
I agree with David that inflation is going to take a longer time to corral than people think. I mean, people are focusing so much on the improvement in goods inflation. That was well expected. As the economy has opened up, the composition of demand has shifted away from goods back to services. So, of course, goods prices are going to be weaker. But services inflation is really high, and the labor market is still really tight. We're still having job gains well above what's consistent with a loosening labor market. So the Fed's got a lot of work to do. I think the big thing about what the next year is going to look like, it's really in the Fed's control. The Fed is going to keep policy tight enough for long enough to get inflation back down, and the outcome we get for the economy is going to depend on how much that actually hurts economic growth. I think there is going to be a recession. I think it's going to last quite a while, but it's not going to be a dangerous recession in the sense that the Fed can relent at any time and end that recession, which is very unusual compared to past cycles. This is not a recession that's going to be driven by financial instability. It's not going to be a recession driven by household and corporate balance sheets being overextended. It's a recession that's completely induced by a tight monetary policy regime, and so the Fed can end it when they think the time is right.
Given the strength that we've continued to see in the economy, and Evan Brown of UBS Asset Management was talking about them seeing it sustained through the first half of next year, do you think the Fed could go even higher than you previously thought in terms of a benchmark rate?
I'm thinking the peak is probably in the 5 to 5.5% range, just for the point you just made, that the news will probably be stronger for longer. It'll make it very hard for the Fed just to stop if we're still at an unemployment rate below 4% and underlying inflation is still running 4% or higher. So I think that it will get a series of smaller rate hikes, but that will probably push us up above 5%. But clearly, the Fed's strategy here is they're stressing the longer rather than the ever higher. So I think once we get to 5.25, 5.5, I think they'll relent, and then they'll just sit there and wait for that restrictive monetary policy to slow the economy down, generate more slack in the labor market, and that will gradually push both wage inflation and services price inflation down.